Welcome back to the channel ICT Traders, and in this video I want us to go back to the very basic of the smart money concept. I call it the foundation of the smart money concept. What is that? It is simply understanding market structure. Now, for some of you that have been trading the smart money concept, you probably have mastered your way around delineating your market structure and being able to spot it correctly. But then if you don't understand this concept, you may have problem even later when you come to trade with the smart money concept. All right, so I'm going to go through the very basic. I want to teach you how to mark structure correctly. I want to teach you how to go from one time frame to another time frame to be able to mark your structures without getting confused. All right, so let's get into it. So I'm using gold because I'm getting a lot of requests that I should use gold for my analysis, hence. All right, so let me show you how to do market structure. Now, two things quickly. How do you navigate from one time frame to another when you are doing market structure? And then secondly, what are the elements of market structure? So look at this. Two elements of market structure. Number one is break of structure. Then number two is market structure shift. These are the only things we have in structure formation. What is break of structure? Now this is it. If you see a trend going upward, you only need a break of structure for price to keep going up, and going up. And then secondly, if you want to see a market structure shift, you only need a market structure shift when price turns from an uptrend to a downtrend. So we employ the concept of market structure shift only when we see price changing direction from an uptrend, all right, to a downtrend. I know some of you that are newbies will really love this video. When we see price change direction from an uptrend to a downtrend or vice versa. So let's get into it. Now, let's say I just came to my chart. The first thing I do is to select my time frame. This is the 4-hour time frame. And then secondly, I look at my chart. So this is the 4-hour time frame. So I'm going to do market structure from where I am now down to that level. I want to show you where the trend ended, where another one started, how to take advantage of it. So look at this. So we saw price coming. Let's start from this place and then we'll continue from that area. So this is it. If you have a downtrend, for that downtrend to continue, you need break of structure and you need lower highs formation and lower low formation. This, for example, is a lower high. This is a lower low. Please don't forget it. Lower high, lower low. All right. So these are the things you will see in a downtrend. This low is high, this low is low. So if you take out this lower low to the downside, right here, can you see the lowest area? So in identifying the lowest point where you can call lower low, you need the lowest wick among all the relative equal lows here. As price pushed, not this one. Let me mark it and make it bigger for you. So look at this. As price pushed downward, not this one, but this one is the lowest point. So that is your lower low. So you pick your line and bring it down to this area. All right. As you drag it across, you will find out that this becomes a perfect horizontal line. So for price to have a break of structure, we need to see price push lower than this horizontal line. So this will now be the benchmark as price is pushing downward. Actually, price started from here. This was where the shifting structure started, but we are starting here so that when we come here, we'll have shifting market structure. So this is now a break of structure. We have broken this structure. What is the structure? This low that was formed and the retracement came in. Boom. Price is breaking structure because of what? Because of liquidity. Okay, where can we find liquidity? This is it. Let's assume this place is full of money. So price is breaking structure because of liquidity. It is chasing liquidity. It is chasing liquidity. I hope that is understood. So boom, how did we know that we have broken structure? We have identified that immediately when this sell candle closed with the body below the line. If for any reason this sell candle did not close with the body below this line, we wouldn't have considered it as a break of structure. All right. So boom. So where is our new lower low now? Not here, because this has been mitigated. All the money here has been, taken away. So the new place that we may possibly have money is here. All right. So this is the place we may reach out for another money. So the new lower low is now here. All right. So boom, we have a break of structure here to the downside. So that is a break of structure. So break of structure ensures the continuity of the downtrend. And what did we see again? Price reached to this area, fetching all the money. Maybe it has finished fetching. Now it will retrace back to gain more energy before pushing again. So where is our new low? The new lower low is here. The lowest area becomes your new lower low. So that is a break of structure. You keep on having a break of structure if price is pushing lower and lower. So your lower low, don't forget, your lower high is still here. The only time you will have a shift in market structure is when you have turned against your lower high. When you have turned against your lower high. So we have it here. Boom. This is the new lower low here. And all the money is now below here. Price pushing lower, grabbing that. Now look at this. Let me show you another one. Can we consider this as a low? Can we consider it as a low? Because that is the question a lot of you people are asking. All right. So here, can we consider it a low? Because we see price push, it has formed a low. Why did I consider it as a low? Now the rule of retracement, you must have at least 3 candlesticks that are closing above each other, whether in the downward direction or in the upward direction. Now look at this. Price came. The last sell candle that printed had the lowest point, and now we see retracement coming. This one and this one are equal in level. Let me show you. This one and this one are equal, but this one is closing above this guy. So look at the closing point for this one. Let me show you. The closing point is there. So we are above it. The next one is closing above this one. So you can consider this as a valid retracement. So if you are marking this point, you could consider this place as a low, price retraced, and this has broken structure. So this now becomes your new lower high. This is your new lower low, and price shifted structure at that point after sweeping the liquidity below here. It broke structure actually first, but we knew it was liquidity when we finally take out the lower high. Remember, I told you a shift in structure can only happen when we finally take out either a lower high or a higher low. All right, that is in the case of an uptrend. So this is it. Now we have shifted structure immediately after we have seen this. Every time we take a lower high, we are no longer coming further down, except for other reasons. All right, so we have taken it, and now boom. Is this a retracement? Yes. Break of structure to the upside now. Now we are dealing with the upside. Okay, break of structure. So what do you call this place? This one is now a higher high here. This place. And the other place is called a higher low. I hope this is understood. So this is a higher low. So we continue the movement. Boom. This is not a retracement. This is not a retracement because it has not met the requirement for a valid retracement. All right. So we need 3 candles closing lower. So this one, the entire movement is considered as one. So this is now the higher high and we have a retracement. So if we are breaking structure, where are we targeting? We want to see price go above here. So that is your break of structure. And then what do you have? You have a higher low. All right. So this is how you continue from there. You have higher high. You have higher low. All right. You have higher high. The highest point is here. And you take it down to this area. You will simply drag it to this point and then wait for price to close above it. Now this is it. If you are doing market structure, we don't consider a wick closing above the high as a break of structure. If it is only the wick, we only consider it as a break of structure when we have the body passing through it and closing above the line. I hope this is understood. So we have this boom. We close above the line with the body. This is where the body closed. So no retracement here. We went up to this level. So this is how you do market structure, guys. It's that easy and straightforward. It's the foundation of what you're doing, you know. So this is it. You have what? Break of structure. So the only reason why you need market structure is to know where the money is flowing. So if you know that you are in an uptrend, what you should look up to is a buy situation. You look for an opportunity to go bullish. And that is what it means to trade with the smart money. You see price break structure, retrace, buy, you go up. Break structure, retrace, buy, you go up. All right. So this is it. We have broken structure, creating a higher high here. All right. A higher high here. And then this is our higher low. So this is our higher low. So what did you see there? Did you now see price breaking structure to the lower side? Yes. Price is now shifting structure. Our higher low now is the benchmark, is the point that when we see price close below it, we have shifted structure. We are no longer uptrend, we are now downtrend. So you continue from that level again. Break of structure. All right. You follow it until you see, this is it. Price came here. We don't have any retracement at this point. This is still our lower high. This guy is our lower high. And you can actually see price closing above it. That means we have shifted structure to the upside. Notice how price never really cares to go further down whenever it shifts structure. It just moves lower. And here we have a market structure shift. Now we are up. We are going up again. So you can see how price behaves every time. You see price went up here, coming down, a shifting market structure here. Let's see this guy bringing it up to this area. All right. Now this is it. Price did not close below here, but we have price protruding down to this side. So we can shift our line to here and see price breaking to the downside. You see, price keeps going low immediately after shifting structure. That is how to go about delineating your market structure. I hope this is understandable. Now, the last thing I will speak about now is how to bring in the different time frame perspective. Now, if I am looking at this point, price actually came. You see price broke structure here. You see price broke structure right here. Let me show you. Price actually broke down here, closing below it, retracing and breaking it here. The question most people ask me is, am I going to use the same structure marking for my lower time frame or other time frame? The question is, it is not always. All right. It is not always. And that is why I will ask you to go and watch my last video before this one. This particular video, top-down analysis made easy. I think if you watch this video, you're going to get so much value in it. You're going to see how I actually talked about navigating through different time frames like that. So the same thing happening here. if you break structure on the 4 hour and you mark it correctly, if you go down to the lower time frame or other time frames, that point may not be that relevant for you. All right, you will need to start your structure across different time frames differently. All right, as in this case, we actually got it having the same area, but then in the lower time frame it may be different. So that is why I will always encourage you to do structure for every time frame differently. Now, if I saw that my 4 hour, if I go to the 4 hour, if I saw that my 4 hour is downtrend, that means I know for the meantime I'm going to be bearish. All right, so if I go to the lower time frame than the 4 hour, I have in mind that the bigger time frame is lower. So what I need to do is to actually mark your point of interest. Now you have to go and watch all the other blog video, all the fair value gap videos before you can understand what I'm saying. So your point of interest and your break of structure are the only thing that are very important in the higher time frame. So once you have a break of structure, you know where price may possibly go to. The lower time frame you do differently for it. So now if I come down to the 15-minute or the 1 hour, I'm going to see so much difference in the whole thing. So in the 15-minute time frame, I'm going to watch out for some of these things. So we saw price came. I want to make this bigger. Price came. So this could have been a shift in market structure for me. All right, because what I have here was a shift in structure in the 15-minute time frame. All right, but as that data is too much, I wouldn't use the 15-minute time frame for that. I would prefer to use the 4 hour, and then in the 15-minute time frame, I will look for a very small data and do my structure around that area. I hope this is understandable. If you are doing your structure in the lower time frame, use a smaller data while having in mind that the bigger time frame has the big perspective of what you're looking for. All right. You see, what we saw as a shift in structure in 15-minute time frame was not a shift in structure. Price was just targeting this fair value gap while creating inducement above here. So price just targeted the area and then hit that fair value gap before crashing. So you may not see the whole picture in the lower time frames. That is why you need to reduce your data and do your structure within a short, environment, and then the higher time frame gives you the entire perspective. I hope this video opens your eyes on the concept of market structure. Now, if you have any question, let me know in the comments. I will keep giving you value. Thank you guys for watching. I hope if you have any question, you share with me. I will make a video separately explaining it. Thank you guys for watching. See you in my other video.